two-wheeler segment at this point in time, where the subsidy that a lot of us consumers have been getting is going to be slashed. Karthik, it is understandable that the proposed subsidy on two-wheeler, which was about 40%, will be slashed to 15%, a significant reduction there, which essentially means that two-wheelers are going to get expensive in years to come.
Electric two-wheelers.
Electric two-wheelers, to be specific. And from March 2024
that's
onward.
Right, from March 2024, April 2024. So, the present lot of subsidies is going to run its life on the 31st of March this fiscal. So again, I think, the famed subsidy and the use/misuse of that has been in question for a fairly long time. Now, there was a cap earlier, right? And the cap was that electric two-wheelers being sold in India, being manufactured in India and then sold in India, can enjoy this subsidy only to a point where the fixed price, the selling price of the electric scooter was at 1,50,000 rupees. Now, a lot of companies came into the radar when the famed incentives that were supposed to accrue to them were not actually credited into their accounts, when the government was actually investigating that has there been any misuse of the famed subsidy. And that is when we realized that a lot of software plugins, chargers, which are essential commodities that need to go along with the electric two-wheeler, were sold separately, so as to circumvent the selling price of 1,50,000 rupees. Thankfully, that issue came to resolve itself with a little push from the government and a little acceptance by the private sector, and refunds were issued by scooter makers including Ola, Ather and a few others, where they refunded their customers on the price of the chargers that were sold separately to them. Now, coming back here, I think 40% slashed to 15%. So that is a significant reduction in the subsidy and a significant increase in what consumers like you and I will pay for the electric two-wheelers that we end up buying, from stores and showrooms that sell them. In addition to that, there was a 15% per kilowatt hour kWh battery that has now been reduced to 10,000 rupees. So I think the cap on no matter what battery size you use was 15,000 rupees, and now it has been capped to 10,000 rupees because most electric vehicles use that, electric two-wheelers use that battery size. So that is another 5,000 rupee reduction. But the good news still is that FAME 2 has not been discontinued. Those were fears that the electric two-wheelers manufacturers had raised earlier, and their associations had raised earlier.
And we spoke to some of them, and they were quite jittery. They said, we are in direct conversation with officials at Ministry of Heavy Industries. We are hoping that there will be some sort of resolution so that end consumers of two-wheeler EVs would not have to pay a very high charge, literally 50% higher than what they were paying.
But I think the good news here is that last fiscal we saw 1 million electric two-wheelers sold. That's a sizable number. In any case, two-wheelers is a huge market in India, and traditional two-wheelers are pretty much a depiction of how the rural economy functions. But the uptake in electric two-wheelers and 1 million units being sold is fairly substantial. So I think the government has come to realize, hopefully rightly so, that there is acceptance for a new technology, for a cleaner fuel, and people are willing to ride it despite the e-mobility highway still being built, despite charging infrastructure yet to come in, as easily being made available as petrol pumps. So that acceptance has come, and a gradual tapering off of the subsidy, to my mind, is a good idea. Now let market forces take over. Let's see, with this reduced subsidy and yet a subsidy in place, is there going to be a continued uptake in demand for electric two-wheelers? And if that happens to be the case, of course, there is going to be a lower clip. The graph is not going to be as steep as it was in the last fiscal. I think it's going to taper down a little bit. But as long as we see the growth, we are in an okay place.
We are in a good place. It's interesting because FAME 2 scheme had an allocation of 10,000 crore rupees, and what we were given to understand up until a couple of weeks ago, that the government will only continue whatever is remaining of the 10,000
That's right.
crore, that is the unspent amount.
That's right.
And right now we are told, and
About
this
2,000 crores or
about
so.
1 to 2,000 crores
That's
is
right.
what is remaining, which is unspent, and government is going to infuse further 3,500 crore rupees, and so a total corpus of approximately
5,000 crores.
4,500 to 5,000 crore rupees
That's right.
towards what we are going to see as FAME 3, if that's what they're going to name it. Rakesh, it is some sort of, it puts fears of auto industries to rest to a point where there is some sort of subsidy. However, many of them are still miffed. We spoke to experts here who and EV essentially people who represent EV industry, and they were hoping that the government is going to come back, listen to them, and also pay back on whatever subsidy they have already given to consumers by the way of FAME 2 scheme. All of that, I think, is coming to there's some sort of parlance here, and I think people will benefit all in all, even if it's 15% subsidy.
First of all, I think subsidy cannot be a life-sustaining model for any industry. So I think in industry, corporate leaders have to understand that subsidy in this case for the EV landscape, because Government of India is committed to certain goals with the Prime Minister himself making those declarations at a global platform. So to give a facelift to the sector and also India's overall commitment from a consumer perspective, from a multi-stakeholder perspective, to shift to non-fossil fuels is welcome. But sustaining these subsidies, again, as we mentioned in case of PLI as well, we need to have a time frame to that. If the industry believes that they can really live on these subsidies and build a viable business model, that's not fair and it's not sustainable. So coming to the micro perspective here, I do believe that a bit of rationalization is going to take place from the demand perspective. What has happened is that the demand in two-wheelers is phenomenal. Karthik mentioned some amazing numbers. And I was reading, R.C. Bhargav's statement a couple of days ago, where he's saying that India is set to become the largest two-wheeler market, both two-wheelers and motorcycles and scooters put together globally. And we have huge potential there because the penetration is pretty low. So, and EV is riding that growth. Uh, there's some rationalization happening from the three-wheeler market where the demand for EV is not as much as it is in two-wheelers. So I do believe that there is some proposal also to explore shifting some funds from there, the outlays there, to the two-wheeler segment. And in terms of pricing, see, I was reading today, when we were discussing pricing of scooters, the luxury market in India is growing at such phenomenal pace. As I keep saying, India is a market, a district. India is a market, a street. You have Sector 18 Mall of India, a famed market, and you have Atta market right next door. And with each passing, 6 months, markets come and go. And there is so much diversity in the way the India is defined as a market. So there is a price point available to the consumer. And what is he buying? He's buying, there is a actually major paradigm shift from purely India being a price sensitive to market to an India being a very, very demanding consumer, having a demanding consumer where he or she is asking for value for money. And EV obviously is the flavor of the season. And that's the good news. And I do believe that people are going to be willing to pay to stay the cost of driving a technology friendly product. So 15% or 20%, whatever the figure finally settles down, this is at a proposal level. This has not yet been decided. It's a MORTH, Ministry of Road Transport and Highways proposal. I think it needs certain validation then at the next level. Then only it will see the light of the day. Because there's going to be a lot of lobbying. I think the government is testing the waters, looking at how the industry behaves. But I'm not a subsidy guy, you know that. And I've never favored subsidies. It's good to kickstart a sector, as has happened in this case. But beyond that, looking at a subsidy as a key business differentiator is only going to hurt the industry, even if it in the short term benefits the consumer.
But Rakesh, will the tapering off be the right strategy instead of, just cutting it absolutely clean exit, cut the umbilical call of subsidies?
Yeah,
I think the tapering off seems like a good strategy.
I would buy that point. Tapering off a gradualism is the key to moving away from subsidies. But put all subsidies in context, Karthik. This government gave corporate tax concessions even when it was accused of being Sood Boot Ki Sarkar, and then the PLI scheme, and then this FAME subsidy. In an election year, all these things are going to add up to the government being seen as giving freebies to the not only the poor people but also the rich. So that contextualization is very, very important. Karthik and Shweta, I think all of us must learn from the global business landscape that businesses have grown being on their own legs. They can't sustain themselves looking at subsidy as being the key differentiator. And we have some great success stories. I mean, a Geo has been built without any subsidy. In auto sector, we have great success stories. In FMCG, we have great success stories. And this is like an infection. It's a virus. This freebie thing,
I'm
if it
sorry, I'm just
spreads,
going to play a little bit devil's advocate here, Rakesh. You gave an example of Jio, which already has very, very deep pockets, and we're talking about very small manufacturers here, especially, new EV players, relatively unknown. They get some sort of confidence boost when they know that they are going to
yeah,
be
Shweta,
getting some help monetarily, and
yeah.
therefore to give it, like I'm not sure if there is a direct correlation, or if you can compare a big FMCG player or a Jio or a Reliance with relatively smaller players like EV makers or battery makers.
I mean, there is Hero MotoCorp in AVs as well. There are big players already there. And business is not for the faint-hearted. Yeah. I mean, let's face that reality. And
Okay.
when businesses are in the fray, they look at profits. You can't grudge a company like Hindustan Unilever or a Geo for its profits because it invested. It took I mean, the fundamental principle of business is that you take that risk and then you put your own capital there. And then rest of the capital flows. In the case of Geo, in COVID, it got the three biggest global players into the fray. And that calls for certain visibility, certain viability of the business model. If there's a business model, investors will come outside of the subsidy framework. Subsidy, whether it's for farmers or it is for industry, is good to give it a support, but it cannot be a crutch, and then you can't live with the crutches, then you're dependable. No
Okay.
business can survive if it is dependent on any kind of a soft. If it is worth it, it will survive. If it's not, and then today we talk of Geo as a great success story. Tomorrow, another disruptor will come with great new technology, great funding, purse, and we'll have another success story. I mean,
Okay.
sorry to say, but there's very little room for emotion in business.
All right, so Rakesh, they're clearly not in favor of subsidies. We're going to move on now. Another interesting
Sustained subsidy.
stories. Yes.
Sustained subsidy.
Sorry.
Sustained, not in favor of sustained
Sustains.
subsidy.
Understood. Not in favor of sustained subsidies, which is a subsidy that carries on forever, has to be tapered off. I think we all agree that subsidies need to be tapered off. But another interesting growth story coming in there, and this is coming from luxury cars. And so since we are comparing EVs, let's also talk about luxury car market, which is growing exponentially in India. Audi India is hoping that the car market is going to grow, actually looking at growing its sales to about 2,000 cars in the first 3 months of 2023, which is up 126% over the corresponding period last year. Therefore, essentially hinting at the fact that India is a growing market, not just for EVs, but also for luxury cars in India. All luxury car makers betting big, Rakesh.
Absolutely, I was saying India is a price point every district. And we have, so I'm not including villages as of now, but once 6.5 lakh villages kick in the Indian economy story, imagine the momentum that we will have. So those who look at India from the prism of just the, urban-rural divide or the urban divide or this tier one, tier two, tier three, four cities, would be sort of say they'll have to reset their plans and research because there are the number of billionaires are growing at one level. People moving out from poverty, have 41 crore people have moved out of poverty in the last 10 years. So there are a lot of right things happening about India. There are challenges, but the luxury story will grow, the EV story will grow, and aspiration level is so strong. We saw it in the auto sector. We discussed it yesterday, Shweta. People have sort of say sidestepped the entry level cars in the PV vehicle segment, and some interesting perspectives on how the Indian market is behaving. And the choice of consumption, look at whether from electronic goods to hardware to FMCG, phenomenal range available. And I do believe that the like the 5G phones being consumed more in tier two, tier three cities, the rush for luxury cars is also happening outside of the big metros. And that's heartening.
Well, that's heartening as long as all the guys who are purchasing the luxury vehicles are also honest taxpayers and they're not fudging their incomes. And that becomes a big area of concern, Rakesh, when it comes to people actually making these, high purchase transactions and the indulgences, which is where I think the the whole debate around TCS is also shaping up. We'll come to that
Absolutely.
eventually. But I want to understand from you, Rakesh, what does this also tell us about the income inequality in the country? And that seems to be a cause of concern as well. I mean, the rich are definitely getting richer. The guys who are seeing this, this high demand, for luxury vehicles, luxury brands, they are not likely to have just one or two of them. They would possibly have quite a few. And then we've got this entire story of have-nots.
See, this have not versus haves debate is going to be eternal. Even when we are not there, that debate will, will not only happen in India, it's going to happen across the developing
What
pack.
I'm coming to is that was there any reason for the super rich taxation to come down from 42% to 37% in the last budget?
Fair point. I mean, I'm as much against subsidies as I'm against not taxing the super rich. And I was not personally in favor of the corporate tax cut which this government did. There can be many excuses that this is, happening because of COVID and you want to give a fillip. Even the earlier UPA government, you remember Pranab Mukherjee gave what they call fiscal stimulus. Does industry really need it? Look at the kind of money they spend at times on their personal weddings. I mean, no, I'm not grudging them for that, but the spend on personal finance, in this case for the super rich, whether it is the startup ecosystem or it is the big ticket brick and mortar dustless, it really further divides the polity and the society, because all these are in public consumption and people do see it. But Karthik, you have to look at the rising middle class. This 350 million is supposed to. There was a Bloom Ventures research which came out recently, which says this 350 million middle class is going to rise to about 700 million by say 2030, if I remember the date correct. So in my housing society, which is about 40 years, 30 years old, I see every week a new Audi or a new BMW or even a Hector coming in. These are all cars about 25, 30 lakhs. So they're not industrialists in that sense. They're executives who've done well. Young people like you and Shweta,
Oh, I wish.
who made it
I
happen.
wish that
So
were
the
true, sir.
rising executive, so rising
We need to go
executive
for a
class is
drive in
also
my humble
realizing
four
this.
wheeler today.
No, it is good. I mean, even a BMW is a four wheeler. It depends upon what the
Yeah,
price tag is. There
The
are
the
four wheelers.
there's more humility here, sir.
the operative word being humble four-wheeler, sir, not a
On
BMW.
ground reality, Karthik, there has been a lot of addressing of the bottom of the pyramid through very, very robust welfare schemes by this government. There's no magic wand. I mean, if you put, say, this argument of universal basic income scheme versus a solid welfare template that this government did, or even put the two together, still there is going to be no magic wand to reduce poverty in this country. It takes time, because we inherited a lot of it. I mean, Britishers came and looted us before that. Mughals came and looted us, and one India was supposedly, I mean, I don't have empirical evidence, but we have historical evidence, one of the richest countries in the world with very, very strong GDP. Look at what the GDP was when Britishers came, and look at the GDP when they left. So we built from scratch. And looking back, it's always easy to say that this is right or this is wrong. The pure play socialist model did harm us significantly, if I can stick my neck out and say that. Maybe that was the need of the hour, but it delayed our growth trajectory. So 1991, Manmohan Singh was the finance minister, who gets all the credit, but it's actually PV Narasimha Rao who had the political sagacity and ability to do such a massive reforms in a minority government. We need many more such mega strokes. Coming to transactions being under scrutiny, look at GST. Whatever you do, there is a GST which is mandated. So in that context, a lot more work to be done. And first of all, the citizen responsibility. Citizen tax responsibility is something, either you empower the tax guys and they come after you every day, then that leads to license law, that leads to the what we call the militarization of the income tax official, versus a citizen honestly, expressing himself and giving the taxation department what is due to them. That's not happening at the pace it should happen. I absolutely agree with you. For 6.5 crore taxation base for 140 crore people with so many luxury cars happening every day, there is obviously need to really ramp up that capability.